All right, let's dive right in. Today, we're talking about a company that's making a massive bet on Ethereum. And in the process, they might just be rewriting the entire rulebook for corporate finance. We're going to break down what that means for the future of Wall Street.
So let's just start with this one number, plus 490%. That is the insane year-to-date return for one company's stock. I mean, while the rest of the market has been all over the place, this thing has just been, well, meteoric.
A number like that just makes you stop and ask, okay, what is going on here? What's the strategy behind this kind of explosive growth? And you know what? It's not a hot new product. It's not some breakthrough invention. It's actually all about a completely radical approach to managing the company's money.
The company is Bitmine Immersion Technologies, and their ticker is BMNR. And their story isn't just about impressive growth. It's about a super dramatic and incredibly fast strategic pivot. They basically went from one kind of business to a completely different and way, way bigger one. I mean, just look at the speed of this transformation. It is absolutely stunning. In February, they're a mining equipment company with zero crypto on their balance sheet. Fast forward to June, they've got 15 million in Bitcoin. But then comes the real move. $250 million into Ethereum in July. And by the end of August, their treasury had ballooned to over $7.7 billion. That's not just growth, that's a quantum leap.
But see, their bet wasn't just, hey, let's buy some crypto. No, it was a very specific thesis-driven bet on Ethereum as the bedrock asset of the new digital economy. And they have a great name for this thesis, digital oil.
So their whole idea hinges on this really sharp distinction between the two biggest crypto assets. They look at Bitcoin and see digital gold. It's a great store of value. It's secure, but it's passive. It just sits there. Ethereum, on the other hand, is digital oil. It's a productive asset. It's the fuel for decentralized finance, for smart contracts, for this whole new world of tokenized assets. It actually does things. And if you're thinking about long-term investment, that difference is absolutely crucial. And the timing of this massive bet is all based on one key belief, that Ethereum is right now having its ChatGPT moment. You know how AI suddenly became real and useful for millions of people overnight? Well, they're arguing that the apps being built on Ethereum, especially things like stablecoins, are seeing that same kind of explosive, real-world adoption as we speak.
One of the big catalysts they're keeping an eye on is potential regulation, like this proposed Genius Act in the US. Now, a lot of times, regulation can sound like a bad thing for crypto, right? But in this case, a clear set of rules for stablecoins could actually legitimize the whole industry and just unleash a flood of institutional money. And guess where most of that activity is going to happen? On Ethereum. It would basically cement its role as a core piece of our financial infrastructure.
So you might be wondering, why do this whole corporate treasury thing instead of just starting a crypto fund? Well, they're basically following the MicroStrategy playbook. And what that shows is that the market puts a huge premium on this kind of corporate strategy. Just look at the numbers. When Bitcoin went up 11x over 6 months, MicroStrategy stock went up 30x. Bitmain is seeing that exact same multiplier effect. In just 1 month, ETH went up 1.5x, but their stock, it shot up 9.5x.
Now, this isn't just some wacky idea cooked up in a garage somewhere. This enormous bet on Ethereum is being backed, and in some ways designed, by some of the absolute biggest and brightest names in tech and finance. I mean, the credibility behind this move is just immense. You've got Peter Thiel, the co-founder of PayPal, as the single largest shareholder. You have Cathie Wood from ARK Invest, who's already poured in over $300 million. And leading the whole thing is Chairman Tom Lee, one of the most respected strategists on Wall Street. This is a legitimate all-star team, and they are all lined up behind this one powerful vision. And when you see heavy hitters like that getting involved, you know there's a long-term plan in place. And this plan is, well, it's as simple to say as it is unbelievably audacious to actually pull off. See, their strategy isn't just to buy Ethereum and hold on for dear life. No, it's an active, complex financial engine, and it's designed to do one thing: constantly increase the amount of ETH they hold for every share of stock. They can issue new shares at a premium to buy more ETH, they use derivatives to make money off of volatility, they reinvest their mining revenue, and, this is the really cool part, they earn staking rewards. Because Ethereum is a proof-of-stake network, their huge pile of ETH actually generates more ETH, which they then just roll right back into the strategy. It's a flywheel. And this entire machine is all building towards this one, just staggering number. Their publicly stated goal is to eventually acquire and stake 5% of the entire Ethereum network. Think about that. That would make them not just a major investor, but a fundamental piece of the network's security and infrastructure.
Okay, so what does this all mean for the rest of the market? Why does one company's balance sheet strategy matter so much? Well, it's because this could signal a massive shift in how both corporations and investors think about digital assets.
This move, especially with the institutional giants behind it, is one of the clearest signals we've gotten that Ethereum is really growing up. It's solidifying its position as the token of Wall Street, the foundational, programmable layer for a whole new world of tokenized finance.
The implications of this one case study are huge. First, it validates Ethereum as a legitimate asset for a corporate treasury. It also creates a new kind of investment vehicle for people who want exposure to ETH, and by staking all their holdings, these companies become active players in securing the network. Some analysts are even saying this is the proof of a major capital shift away from Bitcoin and into the Ethereum ecosystem.
So, all of this leads to a really provocative final question. As more and more companies start to follow this playbook, are we watching the birth of a totally new kind of financial institution? One that doesn't just use the blockchain, but actually becomes a core part of its security. It's a pretty fascinating glimpse into how corporate finance and technology are about to merge.